Hello everyone, hope you guys are doing well today. So today is our day 2 of live crash sessions. Today we are going to basically emphasize on substantive procedure, one of the most important area of your audit. Many people feel that substantive is one of the difficult topics of the audit exam, but I'm assuring you that this is not a very difficult topic. It's a topic of it's a matter of perception. Okay. Now, if you are making a mistake in memorizing substantive procedures, it will be a very difficult part for you in the exam, because when you memorize something, the examiner is not giving you knowledge based questions, he is giving you scenario based questions. So if he is giving you scenario based questions and you're memorizing something, at the end of the day you will be in a position that you might not be able to apply the memorized scenarios, memorized substantive procedures onto the scenario. Okay? Sometimes it happens there are general procedures that are there in the question that you can apply, but most of the times there are areas which are not unique, not common in nature, they're unique in nature. Now, some of the common areas that we see in substantive procedure is that many people write pointers such as obtain written representation from the management. That is a very common point and is applied on maximum scenarios. This is a point that is commonly thinking from perspective of the examiner, a dislike point. Now look, when you're writing an answer, think of the party, the other person who is checking the examination is a human as well, right? So he develops a perception about you before he is checking the answer. If he sees that you are writing common generalized points, he sees that you are not having the adequate grip of the particular topics. You are stuck somewhere and you're just trying to go for the relevant answers. You're just writing the answers, whatever points come to your mind. Okay. So this gives an impression that you don't know much, you have not studied much. You might have the knowledge, but if you're writing important points, accounting related points, or some relevant points after you have written representation or disclosures, that it gives the impression that you're not having the adequate knowledge. So refrain from points that give you a weaker spot. Write pointers if you don't have anything left. If you are having nothing left at all, then go for the particular points of written representation or an in point regarding the area of, we can say, disclosures that are common in nature. Okay. So before we start the particular question, how should we basically draft a substantive procedure? What should be the methodology, or what should be the thinking process of writing a substantive procedure? First of all, number one, focus on the the IFRS. Now, when you're taking the particular substantive, when you're performing substantive procedure, the first area is the IS or IFRS. The IS and the IFRS is on the basis of which the financial statements are made. So if you are not going for that treatment, you are going to miss it out. Okay, the IS IFRS accounting treatment is the key emphasis point here. Okay, now let's say if you are having an addition of an asset or subtraction of asset, any asset that is there in organization, you should have the focus area of each and every aspect of accounting there. It could be recording, it could be valuation, it could be their capitalized cost or revenue expenditure cost, etc., etc. Okay, so when you are looking at the particular practice point, at this point you're practicing, right? So at this practice point, the first emphasis should be that write the IS or the IFRS that is relevant to the passage or the case. Write it down with yourself. Open up a kit, any notes that you have made regarding IS or IFRS, and read the treatment once. For each treatment, you will get double entries. You will get a source document, that is the fixed asset register, or we can get a particular area of any kind of separate document, like let's say ownership deed or a sale deed or a depreciation chart, or we can say any kind of other expenses, accumulated depreciation, useful life assumption, or depreciation method choosing. All of these things are in the accounting treatments. So if you emphasize one point there, you will get absolutely 5 to 8 points of a small passage very easily. If you're just focusing on the accounting treatment and applying it onto the case by application, we mean that you are not using the numbers of the case, or you're not referring to the company or the situation of the company in that case, then you are missing out. Now, what many people do is, now let's see, if in a scenario we are given a passage where property is there. Now, many people don't emphasize on the fact, they don't look at the fact that whether it is a IS 40 property, is it a IS 16 property. Many times it has been a scenario when they see property, they apply IS 16 directly. That is not a good thing to do, right? So read the case, emphasize on the case, and check what is to be done. Now, how to write substantive procedure? First, action. What is the action? Action basically refers to Cairo. Then source. On what are you going to perform the action? So that can be documentations, etc. Then what are you trying to achieve? Outcome. That means the evidence. A good procedure will have all three things. Okay. Now, what are you trying to achieve, or the outcome basically is the point purpose of the substantive procedure. Let's say if I am if I am physically going to verify an asset, physically going to check an asset, what I'm trying to get an outcome of, what is the outcome I'm trying to gather? The evidence that asset physically exists. So if you're writing a substantive procedure that physically inspect the assets, so why are you doing it? You're not telling the examination, the invigilator, that if the examiner doesn't know that why are you doing it, it is an ambiguous situation for them, and an ambiguous situation, ambiguous statement is not very well preserved by the examiner, right? So when you are writing a particular substantive procedure, you should write it completely. That first, what are we going to do? Then on what are we going to do it on? And what are you trying to achieve here? Okay. So this will give you a good outcome, a good result of a substantive procedure. This will be easier for you in terms of application. Now let's read the scenario and let's see what substantive procedure can we get on it. Now, let's read the case. The case says, describe substantive procedures the auditor should perform to obtain sufficient and appropriate audit evidence in relation to revaluation of Elondi's property, plant and equipment. Okay. Now, property, plant and equipment, first thing comes to our mind, IS 16 or IS 40. Okay. Now, IS 16 is the most relevant one because they are saying property, plant and equipment. If they would have just said a property or a building, we could have gone towards both of the areas. We could have read the case and judged what area can we go on. Okay. So now let's see. First of all, the passage, what does it say? Now develop a habit. Now I'm giving you a examination tip. When you are reading the case in substantive procedure question, 95% of the time there is a audit report question connected to it, and you need the materiality for it. So at all times when you read the first paragraph on the rough side of your answer sheet or anywhere in your a workbook or any piece of paper, any place you're writing the answer, write down the materiality calculated. Calculate the materiality at first. It will save you a lot of time and develop a handful practice for you that when you are going towards the area of your audit report, it will help you as you have already calculated the materiality, so you don't have to waste time and go back and identify it. Okay. So here what we have given the particular data is the data given to us is that it is year end 30th April 2005 and the draft profit before tax is 13.6 million. So profit before tax is given to you 5 to 10%. Can be applied here. You are the audit supervisor and the final audit is due to commence shortly. The following matters have brought to your attention. Now, first, what is the first paragraph saying? The first paragraph is saying that at the beginning of the year, management undertook an extensive review of Elonde's non-current asset valuation, and a result decided to update the carrying amount of all the PP. Now they have taken in a revaluation system. They have revalued their assets. If they are revaluing their assets, what comes to your mind? Now, whatever is coming, I'm just rough working here. Okay. What comes to my mind is revaluation. Revaluation is something that is done on based on assumptions. Okay. Assumption. IFRS 13 basically. Now, first of all, assumption is that our asset is equal to something level 1, level 2, level 3 of IFRS 13 here. So first of all, you have to check the assumptions on basis of which you have decided to revalue the asset. Number one. Number two, we need a professional valuer. We need a professional valuer to do this particular evaluation. Or if the management is doing so, are they qualified, experienced, or have the relevant knowledge to do these activities or not? Okay. So this is a basic idea of development. Now, what is the thing that any person who is making the valuation or checking the value of the asset or checking the value of the particular building should have the experience, knowledge of the particular area. Okay. Now we can easily see two of the particular substantive procedures here only. We have just read one paragraph. Okay. Now, can there be a situation that the assumptions made by the management are wrong? Yes, it can be. Now, can we hire a particular auditor's expert here in terms of valuation of the building? Yes, we can. So that is the thing that we can give the recommendation. We are not going to basically emphasize it here that test bring in a professional value. We can bring in a professional value to assess the particular assumptions, to verify the assumptions are in reasonable nature. This can be a substantive procedure that we can write as well. Now, the passage says the finance director, Peter Dillman, contacted a sibling, Martin, who is a valuer. Now, sibling is having, he's a sibling, so he is having a lack of independence here. Okay. Now, this is an area where, first of all, we are going to check the valuer. First part is check the valuer, check the assumptions of the valuer, check his documentation, check his repute in the market, and there is a high chance of lack of independence here because there is a familiarity between the valuer, who should be independent in nature, with the CEO of the company or finance director of the company, and requested that Martin firm undertake the valuation, which took place in May 2004. Now, we have to basically provide substantive procedure of 5 marks for this particular area in relevance to your particular valuation. Now, first of all, IS 16 is applied here, that is a plain sign. Now, accounting treatment. For accounting treatment, revaluation must be carried out with sufficient regularity so that our carrying amount of the asset is on reasonable grounds. Okay. Now, fair value determination is the main component that we have to focus on. An independent valuer is coming here, but the independence of the valuer is compromised because he is familiar to the finance director. Now, revaluation should be on the same class of assets. Revaluation, if it is done, now accounting treatment. Revaluation should be recorded where? In the financial statements, in the OCI, if there is a gain. If there is a gain, then OCI should be recorded in the revaluation gain should be recorded in the OCI and accumulated revaluation surplus account. Okay, so it should not go directly go in the particular financial statements if it is a revaluation gain. If it is a loss, if it is a revaluation loss, that means basically our income statement should be directly affected after we have reversed any surplus that is present to the financial statement. This is the accounting treatment I am discussing. Okay, then we can check whether the depreciation of the asset is changing as the revalued amount is changing. So incremental depreciation or decremental depreciation is applied within this year. So depreciation is to be checked as well. This is the accounting treatment that we should focus on. Okay, now you see that if we work on these assumptions, 5 procedures are nothing at all, right? But we are going to go for something beyond that. Now, first of all, the case is giving us very little information, so we have to use our mind regarding the IS and IFRS. First of all, whenever you write a substantive procedure in any case, what should be the first strategy? The first strategy, a very common point and very effective point of your examination will be that you should obtain information. So here you have relevance to property, plant, and equipment. So we are going to obtain schedule of revaluation. Why? Schedule of revaluation will basically give us the complete records of the revaluation that we have done. We are getting the data out of the particular company. And we'll agree the totals to the trial balance and financial statements to confirm all the records, all the changes that are made in the schedule are recorded in the trial balance and the financial statements. So this will verify accuracy and completeness. Okay, and one more thing, I would recommend you guys a thing that I would like to tell you, that do not write which assertion is satisfied here. Do not write that. Why? Because sometimes in the exam, what happens is, if you're writing 5 procedures, in one of the questions you will be able to have the assertion identified. In some of them you will be shaky. You might not directly grasp it which assertion is it satisfying. So if you get an idea, if you get a position, if you get a situation where you are not sure about the assertion, this will result in a perspective of the examiner that you are not in a current good position to understand this. You're not having a very firm grip on the assertion satisfaction. So don't give them the pointers or the hints or the ideas that you are not very having a very strong grip on the particular areas. Okay. Now, second thing, what we can do now, if a valuer is there, we will check the revalued amount from the report into the revaluation schedule. We'll agree the amount that is written in the revaluation report to the particular financial statements. Now, then we will basically check the experience and knowledge. In other words, we can check the competence and experience of the particular independent valuer, that is Martin Delman, who is reviewing the particular areas. Okay, so his competence, capabilities, his experience will be checked here so that we can check whether his assumptions made were better or not. Now, in this scenario, because the examiner has given us a situation where the particular valuer is a family member of the particular finance director, so the consideration of objectivity and independence will also be targeted here. So we have to see whether the particular valuer, that is Martin Dullman, has any financial interest or any of his assumptions are influenced by the finance director because of the personal relation they have. Okay, we have to check that as well because this will directly impact the particular valuation of the assets. Now we'll discuss this with the management that Martin has a financial interest, a relation with the particular finance director. So this might result in a independence threat or could result in inadequate assumption or evidence base of the particular valuation. Then we will review the valuation report to confirm that all assets in the same class have been revalued. Now IS 16 says that if you're revaluing one asset, you have to revalue all the assets in the particular same class. So if you're valuing them all, that means basically it's okay. Then if you have revalued the asset, then our fixed asset register or non-current asset register is to be updated as well with the new values of the particular assets there, right? So one of the things that is covered here as well. Next, if the revaluation is done, how is the revaluation done? Revaluation is done that we are going to check the carrying amount. Carrying amount is the first thing that we are going to see. Okay, the carrying amount is equal to cost minus accumulated depreciation. Okay, once we have got the carrying amount, we will compare it with the market value. So minus fair value of asset. As a result, we will be getting our gain slash loss. This is the calculation that we have to do. So recalculate the revaluation gain or loss that is recorded in the particular financial statements. If it is a revaluation surplus, then compare the carrying amount with the fair value of the asset and see if whether it is a revaluation surplus or not. Next thing, depreciation recalculation. Now, if the value of the asset has increased or decreased, the depreciation should also be adjusted here, right? Then some other things that can be checked here. Now, if the depreciation is changed, we are going to check whether the particular last year depreciation is also adjusted or only this year from the month that readjustment has been made. So on pro rata basis or in prospective basis, the adjustment are to be made. Then recording in OCI or your particular revaluation surplus account or loss in the financial statements and income statement after the revaluation surplus that was existing or was there previously is eliminated. This is also written down here. And last but not the least, you can write the financial statement disclosure and the financial statement. So you see that our major emphasis here was that we are focusing on your particular financial statements accounting. The accounting, the IS, the IFRS, when the examiner has given us very little information, it gives us a lot of room to recalculate, reperform, check the assumptions, check the calculations, go for the IS and for the recording of the particular entries. So recording as well as any other areas are to be allowed here. Okay, so this can be done as well. Now let's move forward. The second area is inventory valuation. Now what does inventory valuation say here? Inventory valuation says that you have to basically do what? Your firm has attended the year-end inventory valuation. Okay, now what is the thing that we are allowing them to do? The thing that we are allowing them to do is The incident that the process for recording work in progress and finished good was acceptable. Okay, your firm has attended the year end inventory count. So now inventory count is a substantial area, is an important area. Okay. Now, if it is an important area, now what is the focus here? The focus here is that we are emphasizing on. Okay, inventory valuation was the area that we were discussing here. Now, so let's move forward. Now we have work in progress inventory available with us. If the work in progress inventory is there, what is the main idea that finished goods was acceptable, both work in progress and finished goods are material to financial statements, and the quantity and stage of the completion of all ongoing products was recorded accurately during the count. So if you're having an inventory valuation, the main idea is at what point are we in, what stage of the audit are we in, how much inventory is in the work in progress phase, and how much is the finished goods. The entity might have a situation, or entity will have a particular idea where they might oversee their assets by completing their assets or presenting their work in progress assets as finished goods. Okay. Now, if they are basically putting in their assets as work in progress, or if they're having their assets as non-completed as yet, and they're transferring it to their completed nature, that means basically they're inflating the assets value. So it is important for the auditor to identify, to understand that what is the value of the asset and what will be the overall idea of the overall indication of the overall understanding of the methods to value the inventory. So normally what people are doing here is that they value an asset based on their particular completion stage. So based on completion stage, we can identify the value of the asset in terms of, if you have studied cost accounting. Cost accounting, it is normally done where you are valuing the particular asset based on the particular cost that is implemented as yet. So process costing is the main idea that we can get from. Okay, now what can be substantive procedure here? What can be the idea that we could basically identify on? First of all, inventory IS2 says that we have to record our inventory's value at lower of cost or NRV. So if you have lower of cost or NRV, that means basically we have to focus on the completion of the particular inventory and what is the value that we have to write. If we have defective inventory or we have obsolete inventory, we have to write them down. Okay. Now, moving forward, what can be substantive procedures here? First of all, identifying or obtaining the information. Obtain the schedule of the particular raw material, work in progress, and finished goods, all type of inventory that is present. So if you have work in progress, finished goods, or you have our inventory that is in raw material form, identify those values. Identify those number of the inventory, the purchase price, etc., etc. This will give you a idea of how to value the particular inventory. Okay. Now, if you are valuing the inventory, it is easy for us to basically now move forward. Now, then what we will do is, if we have work in progress inventory has three types of cost. Normally, direct material, direct labor, and overheads. Okay, so identify the breakdown of these three costs. What is the cost applied and how much of the cost is applied there, how much is left out there. Okay, so if you are able to see that, if you are able to identify that, that means basically we will be able to value the assets and see what can be the actual position in which we have to add this value. Sometimes what happens is that the work in progress inventory is overvalued or undervalued. The method of valuation is also mattering here. We can use FIFO or AFCO method. That is also that we can check that inventory valuation method is according to situation, or this particular type of inventory is valued somehow different from the others. So we can get evidences from there as well. Now moving forward to the next area, what we can do is we can agree to the, for the raw material that is there, for direct material, what we can do, we have to identify the purchase price. So price of raw material. For direct labor, hourly rate. For overheads, the overhead absorption rate can be identified and check whether the overhead absorption rate is adequate in nature, is appropriate in nature, the allocation of the overheads is complete and is having no other discrepancies here. Okay. Now, moving forward, what can be done here is, now if we have process costing here, now if you remember process costing, one thing we did in process costing was identify equivalent units. Identify equivalent units. That means basically equivalent units are units that basically tell you how much in terms of completed units are there. So in terms of process costing, normally what happens was that we had opening inventory, we had closing inventory, we had finished goods. Now this table might give you a flashback. We had direct material, we had direct labor, or we had the labor or material in terms of labor. If opening inventory is 100% complete, direct material labor could be 50%, 70% there. So it matters according to the situation. Next, what we can say is closing inventory. Now, closing inventory, direct material is, let's say, we have applied 100% material of your closing inventory is on 30% completion. That means basically we get equivalent units here. If in the closing inventory we have 1000 units, 30% completion means that 300 units are complete in terms of the value of the particular assets. So the 300 complete units can be valued accordingly. So these equal units calculation can be done again, and it can be adequately checked whether the completion units are adequately identified and the values assigned accordingly or not. Okay. Now, this is the valuation part that we can do. More what we can write here is, now we can identify inventory that is of defective nature. If there is any kind of inventory that is defective, we can go for that as well. Now there's another paragraph, we can read that as well. From the first paragraph, we have got enough information that we can basically write 4 to 5 substantive procedures here. This is for 6 marks, so we have to write 6 procedures. What else we can get here is, now during inventory count, the count supervisor noted that a consignment of finished goods compounded to compound E243 with a value of 720,000 was defective. Now this is a defective inventory. If there is a defective inventory, that means basically that your inventory is having a position, your inventory is not in the correct value. So if you're having a defective inventory, the value should be written down. So how much should it be written down? The identification of the deficiencies is to be, or the defectiveness is to be identified here, and the chemical mix was incorrect as well. This will reduce the value of the inventory. How much will it reduce is an option that you have to go for, is the area that we can check. Okay. The finance director believes that the compound E243 can still be sold at a discounted sum of 400,000. So first of all, if both the values are given to you, 720 was the value that is existing, 400 is what he is saying can be sold at. So lower of cost on NRV, so NRV is 400, we have to record it by 400, so the value should be reduced by 320,000. So in this situation, the 320,000 is to be basically written down. So this option should be available to you. Okay. Now, if you are not reducing the particular inventory's value, if you're not reducing the particular inventory's value, that means you're overstating the assets. If you're overstating the assets, that means basically now what will happen is, at the end of the day, you might not be able to identify the clear value. The auditor might not be able to identify material misstatements. So value is to be written down. Now actions, what can be taken here for this particular area? If they are given a specific number of inventory, discuss with the management that what are their intentions to reduce the value of the inventory. Okay. Then if the inventory is sold after the year end, then we can check post year end remuneration that we have gotten, the selling price that we have gotten for the particular inventory that was defective for E243. Okay, that will identify the NRV and our assumptions regarding the value. Next thing, if the original cost was 720,000, we have to verify that as well. We have to confirm that the inventory is recorded or written down by 320,000 in the profit and loss statement. That is also to be identified. Then review the inventory disclosure to ensure compliance with IS2. So everything is to be checked by IS2 and the particular areas. Okay. Now the last part that is there is for your bank loan. So bank loan is the area that we can see. Now, Elon secured a bank loan of 2 years ago. Repayment of 200,000 are due quarterly with a lump sum of 800,000. Due for repayment in October 2005, the company met all loan payments in 2004 on time. Okay, so they have taken a loan of 200,000 for 2 years, and they have to pay quarterly 20,000. Okay, they have to pay quarterly 20,000. The total lump sum loan was 800,000. So in 4 quarters, they have to give back this particular payment. Okay, due for repayment in October. Now in October, we have to pay some of the amount that is available. The company met all loan payments in 2004 on time, but was late in paying the January and April 2005 repayments. So two repayments are due on them, so our liability should be recorded there. Okay. Now, if it constitutes to a covenant as well, we have to look at that perspective as well. So first of all, what can be done here is agree to the opening balance of the loan for this year. The opening balance was, if they are saying they have paid for last year, this year they have missed something, the opening balance should be accurate in nature. Okay. First of all, opening balance, then agree to loan repayments during the year to bank statement ledger. Review bank correspondence. If you have any discussed any kind of correspondence with the bank, we are going to discuss that. For any penalties, if they are saying that we have missed any transactions, we have missed any payments, so there are going to be penalties. So are they claiming any penalties there? Okay. Then obtain a direct confirmation from the bank. Why? To obtain understanding that whether there are some other loans as well available that are basically not disclosed to us by the management. So that will help us also. And then the closing balance can also be agreed by the reconciliation done, or the loan agreement signed, or the covenants that are there. We can check that, and the amounts that are missed after that. What is the closing balance? We can verify that from the confirmation from the bank as well. Okay. At the end of the day, the adequate disclosure point can be written there. Classification as current liability can be written there for the transactions that we have missed as of yet. Okay. So these area will give you substantive procedures that are well versed and are basically giving you good marks, good 4 to 5 marks per question for the requirements that we have in the examinations. So I'm pausing the recording right now for any questions anyone has. I'm in the chat box. You can write it down. I'll answer them, and then we go for the drafting part. Okay. Now, in the substantive procedure regarding your non-current assets, how can you write it? First point should be, or a generalized point that normally we can see in many of the questions can be number one, obtain a schedule of property, plant and equipment revalued, because subject is revaluation here. Okay. During the year, and check whether the particular information is completely recorded, and agree the balances from the trial balance and the financial statements. Okay. And to verify accuracy of the transactions. Okay. One other point can be this. A second point can be, we can write some other points as well, like the particular treatment under the IFRS 16, IS 16. What can be the particular treatment here? We can basically check the valuer first. So the valuer is a person who is coming in and valuing all the assets. So review or correspond with the professional valuer to identify competence and capability of the valuer to place reliance on the assumptions made. Okay, this can be one of the areas as well. Okay, next, what can be next? Next can be your revaluation, checking the amounts of the revaluation are the checking. So recalculate the total revaluation gain or loss by comparing the carrying amount of the asset with the market value of the asset. So see, you can easily write 3 to 4 points if you have the understanding of the basic accounting policies here. Okay. So the actions basically focus on what are we going to do. Now, obtain understanding, recalculate, reperform, inquire with management, etc., etc. So these are the substantive areas that we can focus on. Now, this was for part A. Now let's move towards part B. Okay. Now for part B, what are we seeing as is the inventory count. The inventory count is there. So for inventory count, first of all, again the same point. I'm not writing the same point of the operating schedule of raw material, work in progress, and finished goods, and cost accuracy from trial balance of financial statements. So that is a repetitive point. So I'm not writing that. Okay. Now we can write obtain the breakup of the work in progress and agree to the sample of the items recorded to do what? To identify, confirm the value of the value that's completely recorded. To confirm the cost is completely recorded. Okay. Next, number 3. Now, I told you one thing regarding equivalent units of cost. So equivalent units can be identified here. Equivalent units cost point can be written as recalculate the equivalent unit cost and unit cost and completed unit cost for a sample of work in progress and finished goods. Okay. Next, what can be there? We can have an aging of the inventory. That is a point that we have not discussed yet. So review the aging of inventory to identify any slow moving inventory or obsolete inventory to record them at a lower of cost and NRV. Okay, so we are required to write them down and record them at a cost or NRV, whichever is lower. So this will basically be a checking of the valuation of the inventory. Now, I can give you one more point. We can have for defective inventory, discuss with the management the intent to reduce the value of inventory as the market value is told to be 400,000. Okay, we can write one point for written down value as well. So points are there in multiple natures. You can write multiple points. You can have multiple areas. So it is more than enough for you. For 1 point, no, you cannot get more than 1 mark. So 1 mark is the maximum limit that we have. Okay. So maximum 1 mark for one substantive procedure, and you will be if you are writing in complete in nature. So the action, the source, and the outcome that you're trying to achieve. Okay, one of the areas that is given to us is the procedure through which the auditor can assess the going concern assumption, whether the company has a going concern issue or not, or whether the company is a going concern or not. So going concern assumption is basically that the company can move forward or operate for the next foreseeable future. Foreseeable future is basically the next 12 months. If we are seeing about the next 12 months, if yes, then the financial statement should be made in normal terminologies, normal situations. If not, then we are going to make them on breakup basis. So breakup basis is NRV basis, where we can say that all non-current items are converted into current because they are going to be liquidated or paid off or sold within this year. Okay. Now, what can be the audit procedures? First of all, how do I know the company can operate? Through their futuristic cash flow statements. So forecasted cash flow statements. And if I have gotten the forecasted cash flow statements, then I will basically check whether the forecasted cash flow statements are having reasonable assumptions or not. Okay. Then when the quarterly loan is given and we are not able to pay it back, that casts a significant doubt that we might not be able to pay off our liability. So this will give us a situation where the particular loan might be due upon us. If there are any covenants, if there are any covenants, covenants means that we have to pay back the amount within this year. If we are not paying the particular repayments, we are not paying the installments, that could result in a covenant breach, and the covenant breach can result in a instant repayment of the particular assets. So this will be a point area that we can focus on again. Okay. Now, after this, we will inquire the company's lawyer regarding litigation or claims. So this will also give us any evidence that if the lawyer is telling us that we have a legal case and it might result in a huge financial impact on the organization, that could result in a loss in the future. Okay. So we are going to be able to, have to focus that now when we are working in this area, we have to make sure that we are not making a mistake where we're ignoring any litigations, because litigations can cause a big issue for the organization. Okay. Then the board minutes can be a source of information. We can compare the, after the year end we have a quarterly statement, so we can compare the quarterly statement with the forecast that we are near to it or not. So this will give us a better indication towards what is happening and what is not. Then disclosures regarding any material uncertainties can be there. Written representation from the management can be taken. So these procedures can be taken into account from the particular going concern part here. That is of 5 marks only. So 5 procedures can be easily written. I've given you 7 to 8 of them. So I believe that this question is clear to you guys. Now we'll be taking a short break for namaz time here. After the break, we'll be continuing with another question. So stay connected, stay tuned, and wait for it. Okay. Now, what is the first area that we have to focus on? The first area is basically, now you are given the first paragraph. First paragraph, normally what we can see, what we have seen, what we already have discussed also, that the first area is normally given to you as a background or materiality is given there. In this question, normally what is given is Traffic Light is a small local charitable organization. So this is a unique case. This is a very limited type of scenarios that I've seen. I have seen not seen a lot of questions coming on donations of companies. So this is a good question that could prepare you for uncertain circumstances. So now, a small local charity providing facilities to families coping with disabilities. Your firm, Amber and Co, has been the auditor of the charity for a number of years. So we are a member of a charitable organization. The charity is required to receive audit to qualify for local authority grants, although it is a small charity here. Now, one of the areas that can be an ethical dilemma here as well, that our client wants us to give a good audit opinion. So this, keeping this in mind, when you perform substantive procedure as well, there is an ethical conflict here that people have an incentive to inflate their financial statements. If their financial statements are looking good, they will receive a grant. If they see that the company is working in true and fair picture, then they will basically receive a grant. So they might basically intimidate the auditor, or basically give the auditor an idea to present them with a true and fair picture, to give a audit opinion that is favorable in nature to them. Now, TL operates a number of playrooms in several towns. Okay, in they playrooms are staffed by volunteers and operatives in premises that have been donated to the charity. There is no charge for attending. There is no charge for attending the playroom, but the pre-registration attendees may make a donation per visit, and should they wish to. If they wish to, there is no obligation upon them. The vast majority of play equipment has also been donated to TL, with some items being purchased by the charity after specific money raising appeals for those particular items. So we have been given some scenarios. TL income comes from, now income is coming from multiple sources: donation by families for session which are placed into a locked donation tin. At the time of play, these donations are counted at the end of the business on Monday, noted in a cash book and banked on a Tuesday morning by a volunteer. So they are banked on Tuesday mornings only. On Monday, they are counted. So at the start of the week, they are counting the money from the last weeks. Okay. Now, first question that is coming toward us is, discuss the extent of which Amber will be able to use substantive analytical procedure in the audit of TL. What is substantive analytical procedure? Substantive analytical procedure are basically procedures that analyze the organization. They check the overall organization's proof and total. They can have the areas of some logical understanding of transactions being happening. Okay. Now, what are the conditions of substantive analytical procedure? First of all, when we talk about the particular analytical procedures, they can be done only when we have reliable internal controls, effective internal controls, when the suitability of analytical procedure is there for a specific assertions. Then we have predictability of relationship between the auditor's understanding of the entity. Now, if the auditor has a firm understanding of the industry and the entity, then we can have analytical procedure. We can make assumptions on that. If the internal controls are good, the data that we are getting is good, we can make assumptions based on that only. Now, in this particular case, TL's income is primarily coming from donations and legacies. Now, if it is coming from donations, does it bring an unpredictable nature of income? We cannot set a standard that if last time we got a donation of 100,000, this year we might get a donation of 1 million. That's a very unpredictable thing here. So it is an inherent difficulty here that would increase the variances between the assumptions and the actual. So analytical procedure of proof and total cannot be applied here at least. Okay. Then donations that are coming here are coming for play sessions as well and for generalized prediction as well. So here we can not have a predictable future for the particular company. So predictability is low here. Our income is variable in nature. We don't have any precedent based on which we can say that this will be the income that we are getting, etc., etc. So analytical procedure here is a weaker side that we are not going to rely on much because income has no certain trend. For a product to be sold in the market, there's certain demand for a product. So we can place reliance on the particular analytical procedure based on the understanding that yes, this is a normal trend, or this is a specific trend, or this is a unique thing that is happening, etc., etc. Okay. Now, what can be done here next is what can be the next area that we can see whether we can basically have a reliance on the company or we can use analytical procedure or not, is that if the company is relying on grants, okay, if the company is relying on grant that can be coming from the particular government, it is uncertain in nature, it is dependent on an audit report. So if a grant comes in, our assumption that we had regarding the company's revenue or any kind of income is not openly available, right? So it is not available to us, that we might not be able to identify, understand, or make relevant assumptions regarding the income. So analytical procedure is a weak procedure to do here because many things are variable in nature. When things are more variable in nature, it would be a limited thing to do. It is not a good source of audit evidence. Okay. So here we are given some of the limited internal controls present. We are given the income stream that is more than sufficient for us to basically identify that yes, we cannot make analytical procedure regarding revenue. At least if there is something like assets or revenue from certain source, any monthly packages going on, if a trend is set according to that, we can place reliance on that regarding the particular analytical procedure. But other than that, analytical procedure is not a good option to choose here. Okay. Now, moving forward to the second part. The second part says that describe substantive procedure the auditor could perform to obtain sufficient and appropriate audit evidence in relation to property and play equipment. So property and play equipment, two areas that we have, we are going to check them. Now, let's read the pointers. Given that most assets have been donated to the charity, PL has an accounting policy to value assets at value to the charity, which equates to the fair value in accordance with IS 16 property, plant, equipment. Assets are depreciated over useful life of 50 years and 10 years. So now we have basically useful lives given to us, so we can calculate depreciation for them. So normally useful life estimation is a question we can ask here. The fair value is the value of the amount of charity that is coming in, on the basis of which we are going to measure the depreciation, record the value. We have to check that because that is a thing that is that can have what we can say in good words, it can have impact on our financial statements because the charity that is coming in multiple areas, in multiple domains. Sometimes it happens that asset that was bought earlier on, a charity is coming in afterwards, that is access to the value of the particular asset's original cost. So should we add it or subtract it? That is a question that we have to ask. So for property, what is the main area here? For property, what should we do? IS 16. IS 16 is basically that assets are recognized at fair value on donation and depreciation over useful life. So what can we do? First of all, we have a donation based system here. So we will have a donation register. Yes or no? We have a donation register where the particular donations are to be recorded. If they are for a particular property, it should be specified there, right? To identify the amount that is basically allocated to the particular asset. Then we will compare the particular value of the asset that is recorded with the value in the market through independent third party valuations. Now, if you want to verify the value of the particular asset, now here we have to obtain evidence that the asset is recorded in on the correct value. How can we do that? We cannot basically just place lines on whatever the company is giving us. We have to identify the value of the asset through independent valuations. If we are having independent valuations, we have to hire an independent valuer, and an independent valuer should have basic competence, compliance with laws, regulations, previous experience, and good documentations regarding the particular work that they're doing to assess the reasonableness of the value recorded of the asset. Okay. Now, then one thing more that is to identify now, the thing that we have to focus on is the value is based on donations. So, which date did we last value our asset? Date of valuation. Why are we checking the date of valuation? Date of valuation will basically tell us the particular assets value as of that date, and if we have received any further donations regarding the particular asset, have we revalued our asset accordingly or not, so that we can check the compliance with IA 16. Now there is a requirement for IA 16 revaluation. Now if there's a revaluation, then whether depreciation is done adequately or not. If the depreciation is there, can we use proof and total and analytical procedure for the estimation of depreciation? Yes, normally what happens, the asset's value is not fluctuating much. So if there is a less fluctuation or low fluctuation here, the low fluctuation should be catered by analytical procedure. We can develop a understanding and estimation based on the basis of which we can basically compare the actual depreciation that is coming on the asset on the basis of 50 year fair value. So this will be basically easy for us. We can recalculate the depreciation as well if we get the value of the asset. So 4 points are in front of you, and I have discussed one or two more points for the particular question. So 4 marker question, 4 procedures are more than enough. We can write as many as we can. There are multiple other areas as well, such as physically visiting the asset, inspecting its condition for any wear and tear, impairment, etc., etc. Right? We can do that as well. The carrying amount of the asset is to be varied at each year end. Recording in the fixed asset register, we can check that value is recorded adequately in the fixed asset register. That is also a thing that we can be done. Now, the double entries that are there, that are posted, that are recorded, the double entries are normally what is the double entry is asset debit and cash or bank credit. Was this double entry recorded, or a depreciation double entry, that is depreciation expense debit and your asset or accumulated depreciation credit? Are these entries recorded in your general ledger? We can check that as well. So there are multiple substantial procedure if you are basically just focusing on one thing, the IS or IFRS. If you are focusing on the IS or IFRS, you will have a lot of information to write your substantial procedures on. Next thing, the play equipment that we have. Okay, now the play equipment has a useful life of 10 years. So can we basically use similar points here? Yes, we can. Now here, what is the same thing? The same thing that we can use is the purchase register. If the particular asset is brought forward from donations or whatever it is, now we are going to check the purchase register, confirm the invoice and the amount that on which the asset is recorded at. So three-way verification. What is the verification? Invoice compared with records and the bank statement that from which we have paid for the particular asset. Now the invoice will give us the amount. Is the amount that is shown in the invoice is only paid, or there is something else as well? We have to identify that as well. So we can assess the cost is reasonable for the fair value according to IFRS 13. We can use that as well. that the assumptions for revaluing the asset or fair value assumption of the asset is reasonable in nature. We can check that as well. Then we can have third party valuer as well. We can check the existence of the asset and condition of the asset for their value or any checks for impairment. So how can we write one point for the physical existence? We can physically inspect the asset, the playroom area or the plant, to verify the existence of the asset in the organization, right? Then we can check it for conditions. Now, what we can write for conditions is that we can confirm the condition of the equipment or recorded in the particular financial statements in the asset register to verify the condition and assess the reasonableness of the useful life of the asset. Now, they have given us a useful life of 50 and 10 years. How did they decide that? That is a question that you have to basically consider as well. Now, if they have decided the useful life, it should be based on previous precedent. Yes, it should be based on any physical reasonable estimations. The estimations can be based on the particular productivity or the useful life or the useful condition of the asset. If the condition is deteriorated, if let's say we are valuing an asset, we're keeping a life of an asset of 50 years, but in the first 10 years, the asset has demanded at least 6 to 7 repairs and substantial repairs. That means the useful life cannot be extended to 50 years. We should reduce the useful life. So these are estimations that are coming up to the mind when you are looking at this particular question. So your assumptions are to be challenged here. All of the assets are basically revalued again. Now, if the particular playroom area is identified, can it be segregated in multiple different types of asset to check the different useful lives? So component, their CGUs can be checked, right? If a playroom area is there, let's say a playroom area has multiple machinery there, multiple equipment, multiple uh, feature or toys there. So if each toy or each kind of area or each arcade game has a different useful life, they should be depreciated differently, right? So we cannot value it or we cannot value it in the aggregate situation. So if there are different components, check whether the useful life of the different components are different in nature and they're depreciating more than it should be or it is shown in the particular financial statements. Other than that, we can perform proof and total here as well to basically understand whether the estimations done are reasonable in nature or not. Now, moving forward to part C. Now, describe substantive procedures the auditor should consider perform the sufficient audit evidence in relation to legacies and donations. Now, donations and legacies, mainly we are focusing on which area? We are focusing on revenue here. This is the revenue for your NGO, right? So, if this is the revenue recognition criteria is to be fulfilled here, you have to check the revenue recognition criteria. Now, in the scenario, what is given to us, the two paragraphs that are there. First of all, donation by families are coming in and the donations are basically locked in donation boxes at the time of play. These donations are counted at the end of the Monday and noted in the cash book and banked on Tuesday. So there's a difference in timing both the counting and the deposit. Now, donation by local business and individuals which are sent by check to the trustee at the registered office are paid directly to a bank transfer. So that is one of the recording methods that we have to check. Legacies are which are usually paid directly to the charity bank by legal advisors handling the later states. Local authorities grant which the charity reapplies for annually and which they are paid by direct transfer to January if the application is successful. So after the year end, we might get a particular uh, grant by the government or we might not. Okay. Now, mainly what evidence can we collect here is of completeness of recording. The completeness, accuracy, and occurrence. Where does the revenue occur? Now, if we are focusing on revenue, does this transaction occur? Was this expense done or not? Any kind of receipt or payments, are they recorded, identified in the particular financial statements or not? The focus area will be the money coming in and going out. Okay, so money is coming in the bank and going out of the bank, so there should be a digital trail. So one of the documents that I can think of is the bank statement here. I'm changing the ink and writing the points here. So number one, bank statement. Next, donation register. Then cash book should exactly replicate the bank account and a reconciliation should be done here as well. So that we can know that the particular accounts of the cash book and the particular bank statement are equal in nature. there is no timing difference, it is removed from there. Okay. Now, first of all, we can discuss with the trustee that the legacies that are coming to them, the legacies that are coming to them, how much was it, and how do they process legacies in order to ensure that they are paid in the bank account. Then we can review with the legal advisors regarding handling estate, that what are their advices on how do they prefer the transactions to happen, so that we can check them in accordance to that. Then, if the direct charities are there, discuss with the legal advisor to confirm whether these transactions are occurring or not. Then we can perform a reconciliation from cash book and bank statement to verify the amounts being transferred on equal grounds. Other than that, we can inspect bank statement for unidentified receipts which may not be present in a cash book. So reconciliation can cover that statement as well. Okay. Now we can send a confirmation to the bank, or send a letter to the bank as well to confirm the values, the closing balance of the bank statement, and as well as any other bank accounts that are present in any of the banks that the existing accounts are in. Let's say I have a bank account in one of the banks. So I will ask, the auditor will ask the bank that if the client has any other accounts available in that particular bank only. So there are situations where the bank accounts of the company are presented there. They might not show it because they are retaining some of the funds for some of the other personal agendas that they have. So these can be done for legacies. Now for cash donations, the particular question here is how do you trace them? The traceability is the main problem that we can see here. Okay, because now cash donations, if they are written, they are written. Otherwise, we have a only cash count position that can verify whether the amount is there or not. So first of all, we will observe the procedure of independent cash counts that is there. Now, if there are cash nations, we are told that the cash is counted. If the cash is counted, that means basically it is a process that we can see, that on Monday we can go and see whether the cash has been counted or not. Okay. Now again here we can trace the cash books transaction to the bank statement, that on Monday if we recorded a balance of money of 100,000, the bank next day should show a presentation or an addition of 100,000 in their bank account. Next, we will review cash books so that we can identify that no donation record is missing from this week or for the last week. If there are any transactions missing, we will discuss it with the person who is accountable for these transactions to be recorded. Other than that, what we can do is, now we can go for any kind of explanatory areas, any kind of areas where we can identify segregation of duty as well. Now here it is not mentioned, but the main risky area is that the money that is coming in is not easily traceable here, right? If there is cash coming in, it is very difficult to trace who gave it, when gave it, and how much amount was given. So there's a high chance that the person counting the money is having a chance of basically stealing the money. So we have to check any of the systems that are there, like we can say discuss any missing entries, have a recheck of the particular area. So controls are very important here to be applied. Okay. And recounting of the amounts, the amount reconciling, who opens the box, discussed with the reasonableness or the explanation for transactions that are recorded. The person opening the box should be the one recording it, or if there are people counting it, so how is the counting process conducted? We can observe that as well. And the questionability should be here as well, that if we are counting the money on Monday, why are we depositing them on Tuesday? We should deposit them as soon as the cash is counted and be made ready. So we should have a practice of rotation of employees as well. Okay, so these are all the procedures that we can go for. Okay, now I believe that this question is clear. This question is very general in nature. To be very honest, this question is very generalized in nature. Any very specific scenario, I have not seen these types of scenarios very often. These questions are coming in very scarce nature. Normally, what we see is asset, liability, and equity component or an income statement component to be there. So normally what is seen is IS 37 is highly tested here. IS 16 is highly tested here. Inventory count is highly tested here. We have questions regarding inventory valuation. Must this is a pattern that I've seen, that it is a highly likely situation that the particular inventory count or can have a question of inventory valuation can be a part of the particular question. Legal case is a very common case. Bank loan is a common case. Accounts receivable or payable or aging is one of the factors that is basically tested here as well. So I'm pausing the recording right now. If anyone has any questions, the chat box open for you, then we'll go forward with the drafting of this particular area. Okay, now, first of all, IS 16 is to be focused on the property side. the useful life is given to you for 10 years. So you have to see that what are the areas that you can focus on. And for question number A, where substantive analytical procedures are to be discussed. Now, first of all, number one, first of all, the company tells us, the passage tells us specifically that the company has limited internal controls. Okay, they have limited controls, and the operation, now if you can follow my cursor, the operation of the controls is independent on the volunteers and trustees. So not all times the controls are effectively used. So when the controls are not effectively used, the auditor cannot get a reasonable estimation, the auditor cannot get a reasonable data set for which he can place reliance on. So analytical procedure is basically logic testing. So if you're developing a logic for the entity, you should have a sure short information about the entity. So when you are discussing, when you are, the examiner asks you whether we could use analytical procedures or not, here we can see that the internal controls are dependent on volunteers, hence limited in nature. If they are limited in nature, that means basically that they are not giving us the complete picture. So analytical procedure are difficult to be applied here. Okay. In terms of revenue and donations, it is difficult to apply analytical procedures. Okay. But in terms of depreciation, now depreciation is an area where the analytical procedure of proof and total can be used. And if we want, we can write how do we use proof and total as well, where we develop an understanding or develop an estimation of the amount and compare with actual results to identify any variances. Okay. Now for this area, now the A part is generalized nature. For B part, the property, plant and equipment, we can have some points written for substantive procedures of IS 16 mainly. So the main question is going to be the questionability of the useful life. Okay. So first of all, if the asset is coming from donated amounts, so we will review or obtain the donation register to identify the property additions there. Okay. One of the positions can be that we are going to check the donation register for any additional properties from any of the donors during the year only. Okay. Number two, what can be there? We can physically visit the premises, physically visit the property and the play area to verify existence. Now, one more thing that can be there. Now, if it is related to us, the ownership should be with the entity, should be with the trust only. So we can say that the transfer deed, the auditor should inspect the transfer deed of the property to the trust name to verify rights and obligations. Now, one of the areas of fraud that can come up here is that one of the trustees transfers the asset on their own name instead of the trust itself. So if the trustee leaves, they take the asset with themselves. That is the thing that should not be done, right? So we are verifying whether the particular transfer deed is showing us that the asset is on the trust name only. We can develop Now for the proof in total, perform proof in total in terms of depreciation based on the cost slash fair value of donations on the useful life of 50 years and compare with actual depreciation. We can write a point regarding basically recalculation of depreciation as well here. Okay, so I believe that these points are more than enough for you to understand how do we draft pointers regarding any building. Now for play equipment, first of all, if we have purchased the play equipment, we will review the purchase invoice for the play area and verify and trace the equipment's payment to the bank statement. Okay. Next, what can be there? We can have independent valuation of the asset. We can review the donation of the register of the asset to identify how much money is going to be there, any additional disposals are there. Then we are going to have a comparison of the fair value of the asset with proxies or slash similar assets in the market to identify value of the asset. The fair value of the asset would be a better word. Because the fair value will impact our useful life depreciation. Both of them will be impacted, so we have to check that as well of the asset. Physically inspect the condition for asset to assess the reasonableness of the useful life of the asset. Now, physical condition will tell us whether we can utilize the asset for the remaining useful life or not. So, use reasonably of the useful life of the asset. Then in the play area, there are multiple components. So we can also say that we can consider, we can check whether there are multiple different cost generating units or any different asset within the same or different class that should be assessed separately. So assess whether there are separately identifiable assets that fall under different classes and check their useful life for fair depreciation charge. Okay, this can be done here, and proof and total pointer can be again used here. So I'm not using the point again and again. It should be it's if it is once there, it's more than enough for you. Now for the legacies there, the legacies that are basically transferred to the trustees, we can discuss that as well. For legacies, we can discuss with the trustees. Discuss with the trustees that whether the legacies were received or not. If received, where are the documentations for that? Any proof of that? Whether the legacies were received and during the year and trace it back to the record. Okay. Now, what else can be there? Review the correspondence for direct transfers from the legal advisors. Review correspondence with legal advisors for direct transfer of charity. Okay. So that to confirm occurrence and completeness of transactions. Okay. Now, I believe the 2 points are more than enough for that. And the last area, that is for donations. For donations, we can write the pointers at. Now, donation is a subjective thing, so we have to check how is a donation counted. So observe the donation cash count, and during the year to confirm the process. Once we have checked the independent cash count, what we can do is trace the entries, trace the entries from the cash book to the bank statement to verify completeness, or we can reperform bank reconciliation to identify any hidden transactions or costs available. Okay, so we can do that as well. Now with that, we can have some other areas as well, that we can have some explanation from the staff on how do they schedule their work. We can discuss with them their duties, etc., etc. So I believe that people have no question in this area. This question is available. The drafted answer will be presented to you guys. Now you can do one thing is that you can complete this answer and share it with me. I can mark the answer, email me the answers at this email, and I'll mark the answers and provide you a detailed feedback on how well is your answer drafted. And if there is any discrepancies, we are going to basically try to get them rectified as well. Okay, so I hope the session was useful to you guys, and we are going to continue the sessions. If anyone has any questions, they can write in the chat box. I'll answer them, and then we'll finish our session for today.